Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, going to give you a lesson in something that is quite unusual, and I guarantee that nobody talks about it because nobody knows it. But you're going to be introduced to it. It's called the Fibonacci wave count. Invariably, were I to ask you for definitions to widely used terms such as short, intermediate, and long term, I would wager that most, if not all of you, would respond in temporal terms. Although, your responses might vary somewhat. I would expect to hear short term relates to moves of less than 1 month in duration. Intermediate terms moves longer than 1 month, but shorter than 6 months, and long-term moves are lasting more than 6 months. Now, for day traders, it could be quite different. If we're going to say, short term, it's something like 3 hours. Long term is I'm holding it, for 5 days, and intermediate, I got it for 2 days. Everything's relatable to what you trade, but you get the point. I'm basically saying that everything's, most people think in market moves such as temporal terms, but these labels, they might have been appropriate for, prior to the 1980s, but because of increased volatility in financial markets, they become quite outdated because moves that consumed weeks or months in the past are being fulfilled in like days or sometimes even hours, because the market has become much more efficient and also at times illiquid when like the spread of news dissemination, and when hedge funds decide that they're all going to jump in at one time and at a certain price, they basically knock this off its kilter. So price for me was always and still is the most important factor. So without further ado, with that in mind, let's get into like a Fibonacci wave count, a little bit of a background on it. Fib wave theory. Well, the elevation of wave and cyclical analysis went from total obscurity in the late 1960s to today's widespread acceptance. It's quite impressive to say the least. When I was first introduced to Elliott Wave theory, I literally exhausted myself attempting to integrate the facets of both wave identification and application itself. Now, retrospectively, nothing worked better, but to apply it prospectively was next to impossible. There existed like no hard and fast rules to accurately define the completion, let alone the inception of a wave pattern, as it was like definitely there, but it was ephemeral. It was like, trying to catch smoke. In our trading room, we had 5 Elliott Wave experts, or Elliottians as they like to call themselves. And my treasurer, Aldo, would joke that if we gave them identical charts to basically to analyze, we got 5 totally different interpretations. So I really threw in the towel on this whole thing. I mean, I said, it just doesn't seem to work for me. It wasn't until many years later when I learned of I heard of him before. He was an option trader at Bankers Trust. His name was Andy Krieger. He's an extremely successful guy. I mean, the guy was, at the time he was pulling down bonuses of $60 million from Bankers Trust. The guy was an unbelievable trader in options. And supposedly he used a Fibonacci wave count method that helped him determine option trades. Now that, immediately made sense to me because elements of Fibonacci series are interwoven throughout the Elliott Wave principle. Think about it. The thread of Elliott Wave stretches from the number of waves, right, to the extent of the retracements and, price projections. Unfortunately, no one had this method except for him. Now, I have not learned this method directly from Mr. Krieger, but from a trader that worked with him many years at Bankers Trust. Now, in a conversation at Francis Tavern, he laid out for me on the back of a bar napkin the bones of this whole thing, and I'm going to reveal it to you today. Now, I have worked extensively on it because I find it really interesting, and I think it's a good framework to determine whether or not a move has exhausted itself and is heading in the other direction. And my whole goal with my channel is to offer you guys and gals, transformative advice. I want to help my fellow traders get better in terms of confidence and also patience. Because the one thing that we have on our side is that we're not continuously having to be in the marketplace. Nobody's calling us for prices and currencies where we get taken out of a good position or we get put into a bad position. So without further ado, I'm going to introduce you to Fibonacci wave analysis. And here we go. Let me get a cigar and I'll come right back. All right. Got the cigar going. That's nice. Now we can talk. Wish you were here with me hanging out. I'd give you a nice AJ Fernandez New World. It's a good cigar. It's a good daily cigar. Not that expensive, but good price point to be able to smoke. About $9 a stick. But my girl flips out all the time. She's like, you smoke enough to, get a lease on like a BMW M, whatever they are. I have no idea what they are. But anyway, I digress. All right. So as I said in my open, the most important thing is not time anymore. It's price. So price for me dictates everything. So what was outlined for me, the bones of this whole system, was that we need to find a price point where we could have a reaction off of that price point to determine whether or not that price point is a potential low. Now, I'm going to be completely candid with you. I just went to dollar yen. I went to a 4-hour chart because I like to use it on a 4-hour chart. You could use it on 1-hour chart. You could use it on 30-minute charts. I don't care if you use it on 10-minute charts. It doesn't make a difference. It's all relative to the price. It doesn't have anything to do with time. So that's the beauty of it. So what we're doing here is we're using the Fibonacci sequence to determine the wave pattern. So for instance, if we look at a Fibonacci sequence, like the numbers are 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144 out to infinity, right? So it doesn't really matter what sequence you use as long as you stick with that sequence. So I'm going to be using a 21 bar low. So a low that is the lowest low within 21 bars. Okay, and I find that low right here. Now, there is actually a way to kind of predict this low off of a price high to get an idea of where this low should occur or where it could occur. Okay, now that I'm going to go over extensively in the Fibonacci course that I'm putting out. So hint, hint, if you want to really learn more in-depth analysis, but this will get you through. This will definitely get you through. Like I said, I'm here to try to give you transformative advice that you could say, hey, this is cool stuff, and it gives me an idea of what I need to do in the marketplace, right? So the sequence, like we went over, is 21 bar low. The number of bars, if I'm going, even though I'm going forward with the count, I'm going backwards in the sequence. So I got a 21 bar low. So what I want you to do is this. I want you to write down on a piece of paper 1, 3, 5, 8, 13, 21, 34, 55, 89, 144, right? So this way you could follow it because it gets, it gets kind of kooky if you don't have it down and you could follow the sequence until it becomes just second nature. Okay, so we found a 21 bar low here, right there. Now that low is the lowest low within 21 bars. Okay, so now what I'm looking for next is I'm looking for a bar high that's a 13 bar high, and I find it right there. Now at the time I don't know whether or not that is truly going to be a 13 bar high. A market could, reverse back up from this point and jump higher, so now then that negates this 13 bar high. The only way I know that bar is locked, or the wave one is locked, we're talking about wave one right now, 21 to 13 bar high, it needs to have an 8 bar low. So a low that's lower than all previous 8 bars. So let me get rid of this stuff. So we're talking about this low right here. If I take my little measurement stick out and I go from here, I got to exit the drawing mode for that to work. Eight bars. It is the lowest low within 8 bars. That's basically telling me that this wave is locked. Wave one is locked right in here. So this whole leg is locked. So what can I do with that? Immediately, I now know that I can apply Fibonacci ratios off of this, because now I've found a potential real scale to look at. Like, so what is this telling me? What information is giving me? Well, one, it's giving me that this bar really should not be exceeded. This low should not be exceeded. Now, the marketplace should move higher than this bar eventually. Okay. And when it does go, well, where's my targets for it? Now, if you found this 8 bar low, within, let me get my little square here. Okay, sorry about that, fellas and ladies. I found this 8 bar low right there. Basically, let me get rid of this thing. Can't get this off for whatever reason. Sorry. I'm not really good with these tools. I find this 8 bar low. I got 12 hours basically to say, okay, this is locked in right now. It's not truly locked in until it surpasses this 13 bar high. But I got low risk trades to take in here. I could say, well, if this is going to hold, I could get long in here with a stop loss below this 8 bar low. Now, if this 21 bar low gets broken, the whole damn thing is just thrown out the window and we got to start over again. So right now, I have a focal point where I could say that I could get long this marketplace with a break of this high. So how much higher can it go? Well, this is where we're going to apply the Fibonacci ratios. And this is where it gets really magical. Okay. I'm a big Fibonacci proponent, but this is where, for me, I was like, wow, this is where the rubber meets the road. So if I need a Fibonacci retrace here. What the heck's going on with this thing? Oh, long position, short position. That's not what I'm looking for. Here's my Fibonacci retracement. Let's get rid of this thing. Okay. Generally, the first level we're looking for is 1.618 off of this leg. Right there. Look at what the marketplace did. Banged right into 1.618 beautifully. So if we would have, and if my grandmother had a pair of nuts, I wouldn't be here, right? But the whole idea is that, we saw this low and we predicted that this leg should be a powerful leg. In other words, this is really the inception of a potential reversal. And if we got long, say, just for the heck of it, we got long at 150.23, we could add a target at 152.86. Now, what's the next point above this? All right, so let's move forward. All right. I am now looking back for a 21 bar high. So I had a 21 bar low, 13 bar high, 8 bar low. Guess what? Now I'm cycling back to the 21 bar high. Now I told you to write down 1, 3, 5, 8, 13, 21, 34, 55, 89, 144, right? So you could follow me what I'm doing here. So now I have a 21 bar high. What am I looking for after this 21 bar high? I'm looking for a 13 bar low to come in. And I get that 13 bar low right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Right there's my 13 bar low. I could take my little measurement stick out. I think that would be better. There's my 13 bar low. It came in. Again, I now have an idea. Okay, well, I know that I got a 21 bar high. I got my new 13 bar low in. That's a good retracement. Okay, it's a good fib retracement. The main is this. Okay, so I could do the same type of thing. Well, I could buy, 153.83s, stop loss, 153.30, something like that. And now what am I looking for? I'm looking for a 34 bar high. I have it, but it's not confirmed yet because I do not have a 21 bar low yet. So this high is not confirmed. If I was long from 153.80, okay, I'd be sitting tight, not moving, because I'm waiting for one, I'm going to see if this top gets taken out. If it gets taken out without the 21 bar low, I know that's not my 34 bar high yet. That's still, the wave is, the marketplace is still evolving and still moving. Now, the most important fib levels that you could work with on here are the 1.618, you could go 2.618. Well, look at that. I mean, right there, bang, and then 3.618, then 4.618. You could keep doing the 0.618s, but there are internal numbers. But if you want, you could use the big scale because that will basically help. So what did I tell you here? I told you that, oops, wherever that is, I guess that was that. I don't know where that moved from. The big scale, really, the most important is finding a 21 bar low, 13 bar high with the 8 bar low basically sets this whole thing up. This is basically your first wave. So what we've done was we've taken Fibonacci and we have applied it to Elliott Wave theory. But what we did was we have now defined points. Nobody does that. And I didn't come up with this. Okay, this was given to me by a guy a long time ago, maybe 2000, 2000, 2001. And I found it extremely interesting. I said, wow, this is really helpful, because we're all wondering whether or not, is a market move going to continue? Now, does it work all the time? Absolutely not. But what you have here is you have the bones of a system that can basically help you determine like when to get involved. You don't have to be involved all the time. You need patience. This will give you patience. It will help you enter only when the odds are in your favor, that you have potential to make big moves. If you're a guy that has retirement income and you're looking to trade, and you don't want to trade every second of the day, and you don't want to be in front of the chart all the time, you could do this every night. You could look at your 4-hour chart, because you got sometimes 12, 16 hours in between, and you can determine whether or not, hey, I got a low risk trade here. Got an 8-bar low right here. I got the 13-bar high, basically locking this 21-bar low in. And, I could take a long position in this area here, stop loss, down here, or even a stop loss below here, and see how the market reacts. I mean, now that's a damn good move. Now, it's been a reversal trending marketplace in dollar yen. So, a lot of times it's a stop and start type of thing with this Fibonacci wave. But what I've given you is like, okay, 21-bar low, 13-bar high, 8-bar low, 21-bar high again, right? I don't know how that happened. Let's get rid of that. We don't need it anymore. 21-bar high again, then 13-bar low. And then we jump to a 34-bar high. So what we have here is we got wave 1 here. Right? We got wave 2 here. And we have the beginning, potentially the beginning of wave 3. And then there would be the ABC correction pattern. And that is for another video. So anyway, I want to bid you guys a great day. I hope that this helps you. I hope that you find it interesting. Please leave some comments for me. Share my videos far and wide. I want to build a big trading community. I look forward to trading with you guys in my trading room. And these are just some of the crazy things that I have in my toolkit. And remember, always, nothing's written in stone. And always enjoy the party, but dance near the door. Cheers.